Hello guys, good day. It's Go of Trades here, and I want to really explain liquidity to everybody. These videos are going to be very short because I want everybody to grab what liquidity really is and how to make the best of liquidity, how to make the best money out of liquidity. And that's exactly what I will be teaching us now. Um, there are two types of liquidity that I would just really work with. We have dynamic and static, right? We have dynamic in the sense that when you have your normal top lows. The moment, guys, I think network is really messy. Big bits. Network is a bit messy. So we have dynamic liquidity when you have your higher lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, or the opposite where you have the higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, etc. You see where these lower highs are, these areas, they are all liquidity spots. And will at some point expect the price to come back and clear up all of this liquidity around here, clean up everything at some point. And the way to clean it up is by creating, you know, by creating lower lows, higher lows, higher highs. While it is doing that, it is clearing out the liquidity that's from the lower lows and the lower highs. Likewise, when we have our higher highs, higher lows, higher highs, we have created liquidity here. These lows here are liquidity, right? These lows here are liquidity and they need to be cleared. As much as they are liquidity like a trend line, they are also liquidity like this. They are also liquidity like support and they need to be swept. Those lows need to be swept at some point, right? They need to be swept at some point. So these like dynamic. There's still a deeper attention to what this liquidity is, but this is just basically what it's all about. So these lows, at some point price clears and then it starts creating lower highs and lower lows, starts sweeping these lows. Those lows are liquidity. Why? Because they are people's I will explain that a bit, and then it sweeps, and then it moves, and then it sweeps. Why are those places called liquidity? What exactly is liquidity? Liquidity means money. As we tell traders, liquidity is your money, my money. The money that we deposit to trade with is liquidity. Liquidity basically is money. And what price tries to do is to always come and sweep your money. By sweeping your money, I mean hitting your stop loss. So when price hits your stop loss, it is sweeping your money. And by sweeping your money, you have become liquidity. So what price try to do is price try to create patterns that will make you set an entry and set a stop loss. Then price will go and manipulate it, then do what it wants to do. So basically, that is what we are. That is the deep dive we are going to check in a few minutes with liquidity, right? That's the deep dive we are going to quickly check out liquidity right here. Let me delete these guys instantly. Right? That's what we're going to check. So let's look at in this gold chart, for example, the way gold moved and why it's important to look at it. I'm just going to show you guys this one briefly because I don't want to be doing more than 5 minute stops. All right. If you have a look at this 1 hour chart on gold, for example, let me zoom it in very well. Now you see how price has been moving. Look at this higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. You can see what price did there. You can see it. A very beautiful trend line, of course, that you can relate with. You can see that price moved up, swept all the highs that the price had created around in the past, and then it came back and swept at least 3 of these lows. 1, 2, just swept 3 of those lows at least, and then it goes back up again, creates this passing higher and higher low here, comes back to sweep everything to the low. You can see how it swept it, And then we might expect buys or expect sales. But you can see that price create liquidity is switch liquidity. Create liquidity is switch liquidity. But it's not only trend line liquidity that we have. We also have just simple support and resistance liquidity. Like right here. Like right here, for example. Right here, for example, price created this low, this very low right here. You can see how price created this low and then came to sweep it, right? It has swept this liquidity, right? After sweeping this liquidity, price now decides what it wants to do. And price didn't do badly by sweeping this liquidity again, this low again, and then moving on. Now, the question, the $1 million question here is, how do we identify liquidity? Knowing that we don't trade what we don't see, we react to what the market is doing, right? We react to what the market is doing. We don't predict, we react. There are dynamic ways you can trade this market, actually still following the same break of structure pattern that we all know. So I'm going to draw it. So let's say we have markets coming down like this. Market creates a low, it pushes up, and then it sweeps that low. If you watch video on change of character, and then it pulls up to break this high, we can call it change of character, right? Now, in the normal sense, you want to take your trade off here, but there's something I always say: wait for another break of structure. Wait for another break of structure. Once there is another break of structure, right here, this low here has become liquidity. Now, you can take this as a plug and play. This low here has become liquidity. You just pick your entry from the extreme low that swept the first low, and then expect price. This price has swept this first liquidity, but you did not know that here was liquidity until price swept it, right? So as soon as price created another low that has not swept the low that swept the first liquidity, take that sweep as your entry, and then you buy from there. This is reacting to what you did not predict. Predicting is you did not know that here was a liquidity, and you were just predicting. But now that it has swept the first liquidity, now you are waiting for price to create another liquidity before it moves. That is your cue to actually take in the trade and not guessing. And not guessing, all right? Because I don't like people guessing. I don't like people guessing. You react, all right? So this is basically what liquidity looks like, right? So we'll do this later. You see, this is the first liquidity swept. It creates a low. When it creates that low that it has created from the first sweep of liquidity is your target. But before you put out your target, you have to ensure that it comes back, doesn't break that low again. Once it breaks that low, it has become a downtrend. So you ensure it doesn't break that low again. It just hangs and moves up and takes out the high right there. Then you are now rest assured that you have this place as your what? As your liquidity. You have that place as your liquidity. So you just expect price to come back and break it and tap into the extreme and then move. With this pattern alone, you can make a lot of money. Basically, liquidity can be anything. Let's talk about, we just talked about dynamic. Let's talk about static liquidity. All right, quickly. Now, for static liquidity, your basic double bottom is liquidity. By the time it is coming back the third time, it's likely going to sweep the double bottom before it moves, right? Same thing, your triple bottom, same thing, your double top, triple top, same thing. All those things, like if you look at this double bottom that I drew here now, it created a double top as well here, kind of, right? After sweeping the low of the double bottom, what did it do? It went to sweep the highs of the double top. That is the way price operates. So this is static liquidity. Like I said with the dynamic, which comes to your lower highs and your lower lows that must still be swept. Let us look at that dynamic on Euro USD daily time frame. You see it clearly. That was what initiated the buys that we had on Euro USD at a time. Recent, the current buys that we have on Euro USD. You can see, we are currently on a sale now. This is currently on my Twitter live. Today is January 2024, so this is currently on my Twitter live. You can see that price created a series of lower highs, lower lows, lower, and fell down to this point. Swept this low very nicely, right? because all of these places are liquidity, you can see how price just gradually cleared out of liquidity as it was moving up, cleared it up to this point, and now it's beginning to sell all over again. The reason for my sell, I can't really explain it right now. The reason for my sell can't really be explained right now, but it is a basic liquidity pattern. Price came, swept liquidity right here, swept all these highs. After sweeping all those highs, came down, swept the lows, which is liquidity, and pulled back into this other block. And that is where I took the trade for this sell from. So we expect to see a sell down to this point at least before we continue the buys. At least we should see a sell to this point. But once it sells to this 50% here, these very lows, can start taking profit. It's going to sell to this place in the coming weeks, like 2 weeks time maximum. So we are good to go. So I believe we've understood a little bit about liquidity here. You can ask your questions in the group, let other people answer you, and we'll all be fine. Cheers, guys. See you in the next video.